Welcome back to the Traders Network. I'm Michael Yorba, live on yorbamedia.com. Thanks for joining us. All right, my guest this segment is Nick Santiago. He's here every Thursday at this time. Nick, thanks for coming on the show.
Thank you for having me, Michael.
My pleasure. Just a little recap here, buddy. You knocked it out of the park again. We're going to start with the copper, and then we'll move on to the S&P. Both of them right out of the park. I mean, I don't know how you keep doing this.
And we had the short euro, too, there. So
Yeah. Well, let's start with the copper here because you were on, it was the 27th, Thursday last week. You said, yeah, I'm telling them to short it right here, and that was it?
Yeah, that was it. We got a pretty nice decline. What we did with the copper trade was we moved out of half the position, and we moved our stop now into the money. And we'll see if this market can trade lower. I believe it can. Even though we're bouncing today, the Dow is up 214 points today on more of this European nonsense. But we're just going to move our stops into the money, and we're going to let it ride. And if we get stopped out on the second half of it, we get stopped out. We've already taken profits off 2 days ago. So far, so good, and we'll see if we can keep that going.
Okay, all right. I've got a major cycle day for copper coming today. Not the biggest one throughout the year, but or the month, excuse me. But I've got one today. Do you think we're right up against resistance? We'll probably roll over as we go forward the next couple of days on this copper.
Yeah, I do. I think there's a very, very good chance of that. As you know, we got in last Thursday on that big gap up in the market, that big rally,
yep.
And we went short. But I think right now this is just a short-term bounce. If you looked at the Dow Jones Industrial Average from last Thursday, we dropped 600 points in 2 days. So we're getting a reflex bounce, and we'll see if the market can get up. But the volume on the market has been absolutely terrible yesterday and today. So I think there's a good chance that this is just a short-term bounce, and then we head right back down.
Okay. So we moved from copper to S&P is what you were just now talking to.
Well, everything's trading somewhat together, you know. So basically, you could look at one thing, and they're all really trading off the same stuff. When the dollar goes down, the markets are going up. When the dollar goes up, the markets are deflating and pretty quickly and going lower.
Okay, well, just let me throw my 2 cents out there, and then you can kind of like pick it apart if you would. The recent range here from Thursday of last week till a couple of days ago was on the S&Ps 1289 and a quarter to 1208 and a half. The 618 retracement is 1258.40, and that's pretty close to where we are right now. Today is a cycle day. Are you thinking that there's still a little more downside to this before we're finished with this pullback?
I do.
Okay, that's the question.
Yep, I do. I think we're probably this is just a short-term bounce. We'll head back down, and we'll chop around probably into options expiration, which will take us anywhere between November 14th, November 18th.
Okay, that was my question because I got a November 16th, 17th, another cycle coming up, and I was wondering how that went with your cycle work. If you thought that maybe that would be a place where this big rally we've had since the beginning of October to last Thursday, that may be a good place to enter. I mean, obviously we've got to wait till it sets up, but I mean that may be a good place to enter for the next rally.
Yeah, time-wise, that may not be a bad spot. It's just all really about, for me now, is just looking at the pattern on this pullback. I know today we're up, yesterday we were higher, but if we pull back, I mean, that's a time zone where I would start to be interested in the long side, possibly depending on the chart pattern that forms at that particular moment.
Well, if they're going to get the real nitty-gritty when they pull the trigger, they got to get in the trade room with you while you're doing it. Right?
Correct. Anybody that's come last week knows that we've took real good profits off the table 2 days ago, and right now we're still holding a few things on the short side, but we have stops in the money, so they're really just letting it ride now. And I'd like to see more of a decline, and then maybe we'll get that bounce opportunity like you just spoke about. Okay,
let's go to the dollar. Tell me your thoughts there.
Well, the dollar, I know it's having a horrendous day today. It's getting sold off pretty sharply, but we really put in, I think, a short-term low there on October 27th. The U.S. dollar index sold off. It was a big decline, and I think that was the day I was on your show, and I said, this is the dollar's make-or-break time right here.
Right.
There's a fair amount of support at the 75 level, and we were able to get a huge 2-day bounce. And if you look at the U.S. dollar index chart today,
Yep.
this is nothing more than just consolidation before another move higher.
Okay. Any price ranges or support areas that you're thinking we may have?
I think we may pull back to the on the U.S. dollar index futures, maybe to the 76.34 level. I think that would that's a pretty enticing spot right there.
Okay, you got something else on the menu today? Oil. Why are we talking about oil with you? That's kind of new.
Yeah, I figured I'd bring oil out a little bit. The reason being is that so far, if you go back and you look at a chart of oil, anytime we start to get above $90, the market really doesn't have a lot left in the tank. Generally, within 60 days, sometimes 45 days, the market usually will go back into corrective mode. Anytime oil is trading over $90. So if you look at spot crude, basically from October 4th, you could see that we were trading all the way down to around $75 a barrel on WTI. Now we're trading back up, well above 90, and that's unsustainable. The U.S. consumer, which accounts for 70% of the GDP in this country, cannot handle high oil prices. It's just that cut and dry that it will just hit them home. And you just had a big snowstorm in the Northeast where people got 32 inches of snow. There's a lot of power outages. Heating fuel is going to be needed. High oil just does not cut it in this environment at that price.
So, all right, so you're looking toppy at 94.
Yeah, we may go a little bit higher. I think there's a fair chance for oil to go up maybe to the 95. I can't see it going much more than that, maybe 96. But either way, really the reason why I brought it up is we just can't. When we're above $90, the market cannot sustain itself. The consumer cannot sustain $90 oil. Oil has to be lower for them to spend money.
Okay, so we're not ready to short it yet, but wake up. It's coming.
It's coming, yes.
Got it. All right, what about the bonds, this TLT? Because you've been talking about that the last couple of times.
Yeah, well, last week when I was on your show, we talked a little bit about TLT. I told I think 2 weeks ago, you had a caller email in and ask when's going to be a good level, and I said around that 110, 109 area, and we had a huge bounce from that level. We went down as low as TLT 109.82, and it actually made a move all the way as high as 119.50. And now it looks to be pulling back again with a potential setup again on the long side. So, anybody, if I just want to just say, if your subscribers took a TLT long around that 110 level, just have a stop in the money, and this thing could see some more upside, in my opinion.
Okay, so I've got that 200 period moving average on the dailies running somewhere around 114. About 90. Let me see here.
On a TLT?
Yeah, on the TLT,
it's around 100.
Yeah, right about that. But the 50 period is at about 114. Are you thinking a little further down before the bounce, or what are you thinking?
I'm thinking it's about pattern, and believe it or not, today's pattern is looking enticing right now. If we close here, Michael, within the next 20 minutes, I got to tell you, you may have a long trade set up right now. Okay,
well, that's a good to have on the show as we're talking. So has it filled that gap from 4 days ago?
It's pretty close. I guess we didn't get there exactly to the penny, but we may be just a penny shy. So yeah, we filled that gap, and we're putting in a nice little doji bar, which oftentimes will signal reversal. So I think today's rally, believe it or not, is a sucker's rally.
Okay, got it.
In the stock market.
I'm with you on that. Because I was looking for a further downside before a really good place to go ahead and put some money on that one. Now let's move forward to the FXE.
Okay. That was something I talked about last week. I said that we went short the FXE right at 140.90, and we took profits on that trade on the November 1st on the big decline. But I think this FXE can really go down to around the 130, 133, 134 level. So it should have further downside from here. Just a short-term bounce. But I just heard a report that the European Central Bank is looking to restructure and become more like the Federal Reserve. And if that happens, I mean, that could be the end of the euro. This thing could go down to 128.
No, you're not looking for that to happen real fast, are you?
I think it could. Why not?
Wow, that's going to be amazing. All right. So that's going to do a real number on the U.S. dollar.
Well, the U.S. dollar would actually skyrocket higher if
That's
that
right.
happens. And, right now the dollar today is selling off, but it's a real nice consolidation pattern that could be happening for the dollar at the moment.
So that's going to fulfill my little prophecy of all this money in Europe and Asia freaking out and coming over here and finding specific homes for itself.
Oh, yeah. 2012, at least for a fair part of it, should see a stronger, higher dollar. And then once the Fed implements QE3, that's when they'll take the dollar down again. It's just a game of yo-yo with the dollar and the central banks. That's how they inflate the market, deflate the market, and they just try to keep it going like that. That's my theory on it, at least.
Good commentary. I mean, good stuff. All right, Nick, tell everybody how they get a hold of you, how they get in the room and watch you trade so they can get close to these trigger points.
Yeah, just come over to InTheMoneyStocks.com and take a 7-day free trial.
Great. I appreciate that, Nick. Thanks. And I'm looking forward to watching these trades unfold. It's always exciting when you're on the show, buddy. We'll see you next week.
Thank you, Michael. Have a great day.
You too. All right, everybody. That was Nick Santiago, President and CEO of In the Money Stocks. Please, it's well worth the experience. You go in there, watch this guy pull these trades off. He's been phenomenal since we met him.